prices lower. So the question is whether it's exaggerated or not. We do have Ekta with us as well. Ekta, you've been, working the phone lines. You've been speaking with a lot of diagnostic players yourself, and the health minister too held a meeting with COVID experts today in light of the rising cases. What have you picked up?
Well, overall, yes, the diagnostic companies are buzzing today simply because there is hopes that maybe testing could probably increase in case there is a rise in terms of COVID-19 cases. The alarm bells are probably sounding a little bit simply because of the rising cases that we have seen globally. But in terms of the feedback that I am picking up with the diagnostic companies that I spoke to, they said that currently it is absolutely insignificant in terms of testing. There is no real change in the curve which is expected as of now. Now, according to them, based on the trends that they've seen in the past, where even in the earlier COVID, in the previous COVID cycles which had taken place just some time ago, what tended to happen was that there was more home testing as compared to PCR testing in the lab, and that trend is probably going to continue as well unless there is hospitalizations as well as severity of the cases rising. In that case, yes, volumes when it comes to diagnostic labs could pick up. But how much, considering that there is a lot of competition which has already taken place in terms of the diagnostic space? So are you going to see heady volumes that you saw earlier, right at the start of COVID? Unlikely for it to happen again. And hence, while you are seeing gains, as of now, the volumes in terms of COVID-19 testing is one, going to depend on hospitalizations, two, severity of COVID-19 as a whole, and three, what the competition dynamics look like at that point in time. Already for COVID-19 testing, if you just look at the Q2 numbers, they've fallen anywhere between 80 to even almost close to 100% for a lot of these diagnostic labs. It was the lowest ever in terms of COVID-19 testing in the previous quarter. So you can probably not expect a huge, significant upside from those levels based on the situation that we're talking about today. Valuation-wise, yes, there's been a correction to in terms of a lot of these stocks, but the valuations on an FY24 basis still look quite punchy.
Okay, thanks a lot, Ekta, for that. It's important to point out here that, one must not spread any panic right now. Of course, it's important to be proactive, but don't panic. And the government has said in as many words that they have enough and more resources to deal with the pandemic and the situation if it goes out of hand. And as of now, the government has asked several states to set up surveillance for variants to detect whether variants of coronavirus, new variants, have reached India or not. But market expert Prakash Diwan is joining us in. Prakash, generally, there's a fear that grips the markets when these kind of COVID situations erupt. And this time, at least as per reports, the situation in China is quite grim. From a market investor standpoint, what do you do now?
Good afternoon, Sonia. So, essentially, what China is facing is probably an issue that is still, I would say, encompassed with its own limitations. I mean, this is a fallout of a very weak vaccination program. The vaccines have not been effective, and hence they've always been struggling to keep a lid on whatever COVID cases were expanding. Now, if that were to spread beyond China is the big worry, and that's a big if. And my sense is if the variants are not newer than what we already kind of got familiar with and have handled and tackled those, I don't think that we need to, really worry. But the market was so overweighty in terms of valuations earlier that, this was a very perfect trigger of sorts for some sort of a sell-off. And in the absence of any fresh buying globally or from, FIs, I think, the market probably gave itself to this thing. But the real capitulation is something which will only happen when you have empirical evidence. And as you rightly said, there's no need to panic either in the market or on the health front. I think we will probably be in a better position to handle this as things get much more clearer. So as an investor, if you have a wish list of things to buy, which is beyond what Mangalam's wish list carried, which is more momentum driven, short term, immediate term, for the long term businesses that are resilient enough and you will get them at softer valuations, you need to go ahead and buy. It's as simple as that. These are days when you need to revisit your buying list or your shopping list and orient that towards your portfolio allocations. There's nothing better than this at this moment. And remember one thing, what is happening in China, if that were to actually grow within China, there's a huge supply chain disruption that could get triggered globally. and we could benefit from a lot of things that we probably do, and the China Plus gets only much more sharper. So there could be some flip side, benefits on the flip side as well. So don't worry about markets as much. Just look at what you need to buy or what capital you need to allocate at this point in time.
Okay, all right. Well, Ekta is well soothing our nerves out there. She's saying it's not a case to worry as of now. And Prakash saying if in case, the hope is that things don't get that bad, it could actually be providing an entry opportunity in some of these stocks. So Prakash, on that note, if you have hotel stocks are under pressure, Delta Corp as well is lower, some of these aviation companies as well. From this entire unlock trade, which today is under pressure, which ones would be your pick?
Nigel, that's exactly what I'm saying. So I have, let's say, X number of stocks in my portfolio, and if most of them happen to be resilient enough in the long term or the medium term, I would just need to keep on adding to it. But out of these specific sectors or segments that are more directly COVID correlated, I would believe aviation, for instance, might get impacted from a sentiment perspective. But the way Indigo flights are carrying, to full capacity, the way people still want to travel, and they've managed the COVID tough times very brilliantly. So I don't think there would be another fallout where it will start impacting the business. But this is something which is like a blip, and once things resume, it could only get better. So I would definitely buy into the ones that are down today, but keep away from those labs and those diagnostic companies. They're so richly valued. And it's not going to be the same again, even if things were to kind of be a bit sour from the COVID perspective. So let's not kind of start extrapolating that Dr. Lal Path Labs could do 10% better margins or better revenue from here on just because of this news. So I would stay away from all the positively driven momentum stocks, but buy into the likes of Indigo and Indian Hotel because they're far more resilient, even in the medium to long term.
Point taken, Prakash. Sticking with the consumption theme itself, I'm not sure whether you followed this story or not. Yesterday, Jubilant Foodworks actually announced that they will deliver pizzas in 20 minutes. That's breaking the 30-minute barrier right now, as anyway 50% of their orders were delivered in 20 minutes. Now they've cast that in a campaign itself. Do you think that would be enough for the company to actually go ahead and grow their core business? Because up until now, the street was pinning their hopes on their ancillary business to drive growth. But now with this 30 coming down to 20, this could change the game for them.
So, Magnum, you know this so well. Nothing sells as well as pizzas do, right? Whether it's donuts or biryani. End of the day, you want to call up the hunger helpline because you actually crave for that pizza. And the best part about this 20-minute innovation is it does not leave people with much of time to think in terms of what else they could order. And remember, pizzas were not competing against another pizza supplier. They were competing against alternative foods. And with this timeline coming down, it becomes at par with a lot of the other delivery mechanisms that exist from other nearby eateries, right? So from that perspective, I think they will definitely see a swing, and there will be a little bit of an improvement in revenue for sure. If it sustains as an improvement in market share in terms of the entire food share, then of course, it will translate into profitability as well, is my guess. But I'm sure this is definitely going to work out. And then the target of touching that 2,000 mark in terms of a store network is phenomenally very well designed, because it covers the most productive or the most profitable locations in the country. I mean, it's almost like 80-85% of revenue generator segment. So that's what's going to be a big change. But yeah, you'll have to give it time for these strategies to be implemented. But I'm quite positive it could work for them.
One of the things the CEO said to me, the global CEO said to me, is that they're slow when it matters and fast when it counts. So we have to give them time, and the time that they will give us then is 20 minutes. Prakash, just hang in there. We'll take a short break, come back, and we also discuss the market technicals. Rahul Sharma of JM Financials will join us. Stay tuned.